Good morning. Welcome to IG's Early Morning Call. It's Thursday, the 13th of July. Let's take a look at the headlines as we wait the start of today's European session, which is expected to rise as we see the dollar fall. It's down close on the dollar basket to 100 after yesterday's consumer price index led traders and economists to believe that the end is in sight. The rise in US interest rates. All this dollar weakness has been a boost for pretty much every single dollar-based commodity. But it's in a particular boost for gold, which remains that safe haven, and base metals generally on the way up in today's session as well. We'll take a look at copper. And it's not just good news for the Chinese economy, where we've seen some relatively poor trade numbers, exports falling the most since February 2020, when we were in that wake of the initial fall in the economies because of COVID. Take a look at volatility. Yesterday's news in the States pushed volatility down to levels which we're now seeing, not seen since the beginning of 2020. So we're talking 3.5-year lows for volatility, which means that risk assets are very much back in vogue. Big gains yesterday in London. Look at the size of that candle that we saw on the way up. In fact, that's the biggest single day rise in the 24-hour market since the 21st of March. And we're building on that today, giving us rise to a stronger start to the London markets after what has been an underperformance for London against the rest of Europe. German DAX, fifth day in a row of gains. We're opening at the moment at 1638, which is above yesterday's cash market close. Same sort of price action on the French markets. And we've seen this overnight as well on the Asia Pacific markets. Let's take a look at what's happening there as well, because we've got gains across the board. Hang Seng up 2.5%, Nikkei up 1.4%, S&P ASX 200, that's the Australian benchmark, also gaining in today's session. So we got gains across the board in terms of some of the stocks, the indices worth watching. I want to show you this chart if I can, because this is one of the companies that reported late last night. Now, this is BASF, just very quickly. It's cutting its full year 2023 sales and adjusted EBIT forecast. And this could well be on the way down in today's session, one of the stocks that could well buck the trend, and of course in the German markets. Let's take a look at the Wall Street close, and just to quickly bring you up to speed with what's been happening as of the close last night. Gains across the board. NASDAQ up almost 1.2%, S&P 500, Dow Industrials gaining as well. But I think really it's all in the print. Yesterday, just by the smallest fraction, just a couple of ticks above that prior line of resistance at 34,574, which yesterday for the intraday trade gave us the highest print that we've seen on the Dow this year. 12th of December 2022 was the intraday high that we saw yesterday. And then all of a sudden, the sellers came in and it pushed that market down, but not before we ended up closing, actually, not too far away from the recent highs. But the message is that money is going back into these risk assets, especially tech stocks. We got the NASDAQ as of the high point in today's session, which is above yesterday's intraday 24-hour high. We're up 39.53%. And the NASDAQ is now at levels there not seen since the 18th of January, 2022. What's been going on under the covers? Let me just show you a couple of charts. Just to show you what's been happening. Nvidia, another new all-time record high. The Nvidia stock was boosted yesterday by reports that ARM, which has been spun off by its owner SoftBank into a separately listed company, expected in possibly September this year. ARM has said it wants Nvidia as an anchor investor. Remember, Nvidia tried to buy ARM but failed because of competition concerns. And in amongst some of the other stocks we're watching, it's been pretty good recently for some of these banks. I want to show you this because this is JP Morgan Chase. This time tomorrow, I'll be taking a look ahead to the earnings out from this banking giant. And in the intraday session yesterday, we saw the highest print for that stock not seen since February 2022. So you can see it's a broad sweep of sort of stocks that did well in yesterday's session, but tech's taking the plaudits for all the big moves. So at the moment, at least, we're looking for gains across the European markets. We're looking for gains across the US markets a little bit later on today. All this coming, as indeed it has done, through gains pretty much right the way throughout the Asia Pacific markets. Much of what's been happening has been the risk off because of expectations now that the end is in sight for the interest rate rises. I want to show you what's going on with the dollar, because the dollar has absolutely been front and center of all this. And you can see, if you look at the dollar basket here, this trade, the index is closing down on the highly psychologically level of 100, a level it hasn't touched since 18th of April 2022, some 15 months ago. The dollar weakened yesterday, that big candle that we saw down, after the release of US consumer prices. Now, the headline CPI growth slowed, that topped 3% year on year, lower than the 3.1% expected. We have to go back to February 2021 to find a lower CPI. Core consumer prices rising by 4.8% year on year, also missing estimates to 5%. Now, what's this mean for Fed and the interest rate picture? Well, market clearly bets on the fact that rates may peak sooner rather than later. And just to quickly give you some latest data, yesterday we were looking at a 93% chance that the US Fed would raise interest rates by a quarter point next time. Today, it's 92.2%. So you can see, still expected 15 basis point rise. Now, this data out today, you can see on your screens now, could well add to that speculation that we have already topped, or rather, we are beginning to crest, I should say, in interest rates, and possibly as well topping out on bond yields. 1:30 today, we get more inflation data. This is producer prices instead of consumer prices we saw yesterday. It's expected to rise, but that rise is beginning to slow. Month on month, we're looking for a 0.4% print. May we saw 1.1%. The core consensus for the year is 2.6%. So that's down heavily on the peak that we have seen. Also at 1:30 p.m. today, UK time, initial jobless claims. Expectations are for 250,000 new claimants. And as a result of all this, I think the trade out of this, I want to show you this before we get on to the other after effects from that weaker dollar. This is the euro yesterday. Stunning performance on the upside. And I think you look at this now, we are pretty much now at levels not seen since the 31st of March 2022. And in fact, if I push this up here, you can see where the new ceiling is, just above where we are at 111.86, which were the highs that we had in this market back on the 31st of March 2022. So 111.46, if you're long on this, stop goes underneath the underside of yesterday's candle. And I think really, it's really all about whether or not this producer price index is likely to reflect what we saw yesterday for CPI. In terms of the follow-on effect of all this, well, as we saw in the headlines, we're seeing these dollar-denominated commodities, pretty much all commodities, rising as a result of this. A lot of buying in gold yesterday, and indeed again today, we're something like around about $38 away from the 2000 level. Really not too far away from the record highs that we saw printed out for us. When was that? That was the 3rd of May this year at 2082. 1962 is where we are. So money going into gold. It's not just gold. It's not just precious metals. It's some of these base metals as well. Look at this nickel rise today, 4.4% up on the session. Sorry, yesterday that was as at the close. And that market's going to open in London in a short while. It was the highest since the 21st of June. Copper as well, on the way up, other base metals benefiting. Yesterday, copper racing past the 200-day moving average. And indeed, as we've got that market opening just now, 85.18 is a little bit higher than when we closed out in yesterday's session. So base metals, precious metals, aluminium, zinc, nickel, they're all up on the session in today's trade. Now, even though the Chinese trade surplus widened in the month of June, this shouldn't hide the fact that it's another sign of the world's second largest economy is beginning to fade. China trade missing forecasts of both imports and exports. And in fact, it was a big move lower and a big surprise for the markets as well. Imports falling 6.8% in June compared to this time last year. Economists anticipated a smaller drop of 4.1%. Exports also falling by a margin of 12.8%, also more than the 10% expected. To find a higher drop, we have to go back to February 2020 when China exports came in virtually to a halt. China's export slump comes as sluggish overseas economies struggle with inflation and rising interest rates and buy up fewer goods from China factories. If we look at what's been happening on the Chinese yuan, this is the dollar first against the Chinese yuan. We've seen the dollar falling recently against a whole basket of currencies, and that's exactly what's happened. But look at what's gone on today. The dollar is up. One of the few moves up for the dollar in today's trade against that weaker CNH. Now, Chinese factory activity has been shrinking in recent months, and policymakers are now reckoning with the prospect of prolonged slower growth in the world's second largest economy, just around about 3% annually, way below the 5% that had been anticipated. Now, this rise that we've seen, in fact, we've got to go back to the bottom of this chart here, where in January we hit a low for the dollar against the Chinese yuan on expectations things would begin to pick up as China came out of the COVID-19 lockdowns. But since then, it's really been a dollar story. Only recently has the dollar pulled back. Now, 3% is less than half the rates typical throughout these recent decades for Chinese growth and creates a feel of an economy in recession. It's not in recession, but nonetheless, it feels like that compared to recent activity. Now, let's take a look at what's happening with the UK, because we've seen some statistics out whereby we've seen the UK economy's monthly GDP figures coming through, and we've got a reading of 0.1% shrinkage or contraction in May compared to April. Now, this is better than the 0.3% contraction that economists had been looking for. So that's a little bit of a positive news headline, despite the fact it is still negative. Industrial production falling by 2.6% in May compared to last year, in line with expectations. But as we'll see in just a minute, there are some economic stories that are beginning to worry some people. I want to show you sterling. Nice big rise here in sterling. And in fact, in today's trade, we have succeeded in claiming ground above the 130 level. Yesterday, you can see here just fractionally above the 130 intraday, but then we pulled back to close just below it. Now here we are, 130.13, which is the highest print we've seen for sterling, seen since the 22nd of April last year. Now, one of the big things that's happening in the economy, despite the fact we've got sterling rising, this is all really about a function of the Bank of England. And the Bank of England is widely expected to continue to raise interest rates because inflation hasn't peaked. And we've got concerns that are continuing to rise about this. I want to show you one chart I think that's worth looking at, a chart I don't seem to have ready. Let me just quickly bring in Barratt Developments. BDEV is the ticker symbol for that. Barratt Developments has come out with a trading statement this morning. Now, there's a couple of stories going on here. You see this pullback recently for Barratt Developments. There's a big uptick in building costs, and there's a downtick in the price of houses sold. And this has been confirmed this morning from Barratt Developments, which says that the fall in house prices within its order book, according to the trading statement this morning, was approximately 3.5% over the full year to the 30th of June. That falls roughly in line with what we got from the likes of the Nationwide and also from the Halifax. In the last couple of days, there's a little bit of an uptick in Barratt Developments. And the company has just confirmed this morning it's anticipating that adjusted profit before tax is expected to be in line with the current market expectations. Year-end cash down around about 150 million from this time last year, just over $1 billion. But of course, don't forget, it's paid 200 million back in share buybacks over the last year. And it says that following the end of Help to Buy and increases in mortgage interest rates, first-time buyer reservations in the year to date are down by a whopping 49%. That's 49% drop in first-time buyer reservations compared to this time last year, and accounted for more than half of the decline in the total reservation rate. Demand amongst existing homeowners was more resilient. It didn't give any figures, but it just goes to show that I think that these house prices, or rather the price of these house builders on the market, doesn't really reflect, I think, the problems ahead for this market. Interesting to see where Barratt Developments opens in today's session. Staying on the charts, just wanted to bring up a chart of Hays. Yesterday, really strong performance yesterday after that news coming through from Page Group. Hays has confirmed what Page said yesterday. We've got solid growth in temporary employment. That was up 4%. Permanent employment down 9% with reduced client and candidate confidence about the outlook as well. Despite tougher market conditions, Hays says fiscal 2023 operating profit expected to be in line with market consensus. This is beginning to get a little bit boring in as much as the consensus has already been beaten up. But the company does say that because of the interest in recruitment on a temporary level, it is able to see that fees are not too bad off. They're down 2% from the same quarter last year. But these tough market conditions, we'll have to see how things develop. That stock will open at 104.8. If you're short on this, your stop goes above this area up here at around about the 108 level. If you're short on that, if you think that yesterday's upside has been overbait. Walt Disney shares were up late on the IG platform last night, all sessions after the Walt Disney Group said it will extend the CEO Bob Iger's deal as leadership of the company for an extra 2 years, taking his tenure through to 2026. Now, Iger told CNBC in February that he had no intention to stay longer than 2 years in his post, which would have taken him through to 2024. Iger had a successful 15 years at the company as CEO from 2005, during which the company expanded in many directions, including the acquisition of Pixar for $7.4 billion, Marvel for $4 billion, and possibly the most lucrative deal in the purchase of Lucasfilms for $4 billion from George Lucas to acquire the Star Wars multimedia franchise and the Indiana Jones series. Looking at what's happening with the Walt Disney share price chart, you can see it's been bumping along the bottom. This vertical dotted line is when Iger came back into the fold. Bob Chapek saw shares rise from the highs we had back in March 2021 to the drop down to levels not seen in several years. Chapek, who was appointed CEO in early 2020, has seen this pullback in shares. It's to be explained in some part by increased competition within streaming. But his successor came in November last year, Bob Iger returning to the business. Since then, shares really haven't performed that much. But the stock was up more than 1.8% late in yesterday's session on the IG platform as a result of this news that his tenure has been expanded by 2 years. Now, investors and traders will be looking ahead to some earnings out before the bell today. This from Delta Airlines. Before the US banks tomorrow, this is one of the stocks to watch. Let's take a look at what we've got in terms of the possible move on the share price chart. DAL is the ticker, and it comes through with let me just bring up the share price chart because it's an all-session stock on the IG platform, and it will trade before the market gets underway later on today. And we will see a response to the numbers out. Over the past 3 months, the stock has risen some 53%, benefiting from high demand for travel this summer following the pandemic. But there's still a long way to go to get Delta Airlines share back to pre-pandemic levels. I mean, this itself takes us back to March 2021, where it was at $52.08. But if we expand it further out, you can see that pre-pandemic, the stock was trading at around about $60 a share. It'll open today at $48.54. And the big question is, will the earnings out today be enough to spur further highs? And will it get past the $50 level? The street expects earnings of $2.35 per share, up 64% year on year. Revenue forecast to rise by 11.9% to $15.46 billion. So they're quite meaty expectations. We'll have to see how this stock fares in the face of that when it reports its quarterly numbers out later on today. For the full fiscal year, analysts are currently forecasting earnings per share of $6.13 on revenues of $56.86. Another one coming to the market before the bell today. It's not an all-session stock, but Pepsico is going to be interesting. It's due to report its second quarter figures. The street expects the group to post adjusted earnings of $1.96, which would be a 5.4% rise on this time last year. Revenue expected to rise by 7.4% to $21.75 billion. Now, investors also awaiting any potential update on the full year forecast. Pepsico currently expects to post revenues of $90.97 billion, up 5.3%, and earnings per share of $7.96, up 7.8%. I'll show you the share price chart, but as I said, it's not possible to trade this all sessions on the IG platform. But it'll be interesting to see what happens in the wake of these numbers out this morning. The thing about Pepsico as compared to Coca-Cola, it's a smaller company, but PepsiCo does have a wider spread of interests. Pepsi it's got Frito-Lay, it's got a number of crisps, chips, whatever you call them, drink type accompaniments, accessories, or whatever you would like to call them. So it does have other interests outside of the fizzy drinks, unlike Coca-Cola, which is more concentrated in the fizzy drinks business. Let's take a look at what's been happening with the oil price. We are looking at a rise in oil prices today. US crude stocks rising much more than expected last week, according to the EIA. Despite this, we'll have a look at in just a minute the price chart of WTI. But crude inventories rose by 5.9 million barrels last week. Net crude imports rose by 600,000 barrels per day. Gasoline stocks virtually unchanged. distillate stockpiles rising by 4.8 million. Now, all this expansion in the amount of oil in the market would normally lead to a drop in the price. But look what happened yesterday. Big gains. And in fact, yesterday we managed to have almost an entire candle above the 74.70 level, which had been the previous high we had back on the 24th of May. US crude, or WTI, is now trading at levels not seen since the 1st of May this year. So if it's not, clearly it's not a rise in stockpiles which is doing this, because it wouldn't normally have this effect on price. So what is it? It's all about the fact that hopes are beginning to rise once again that the US economy and other economies possibly around the world as a result will miss out on recession, which means that demand will keep up. And as we heard just the other day from the EIA, they're concerned about the fact that the demand-supply imbalance is becoming accentuated again because companies just not investing in new oil fields. Restriction in supply, increased demand means higher prices, and that's the theory. That's it. We're back at 10:30 with Charting the Markets. Do watch out at the start of today's trade for the likes of Barrett Developments at the beginning of today's session. Also, Hayes, two companies worth watching as a result of a trading update this morning.